Hello everybody, this is Toni Turner and welcome to the market now as of Friday, September 20th, right after the markets close. Well, a U.S.-China trade deal appeared elusive today in the afternoon after Chinese officials unexpectedly canceled a visit to farms in Montana and Nebraska amid 2 days of ongoing talks in Washington. Chinese officials were expected to visit U.S. farmers next week as a goodwill gesture, but canceled to return to China sooner than originally scheduled. The cancellations come after the United States lifted tariffs overnight on over 400 Chinese products. While the market was positive earlier in the day, this afternoon's news on Chinese officials departing the meetings early took the market lower by the close. And on all that, let's go and look at 3 charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know by now, this is the ETF that closely follows our benchmark S&P 500 index. Now, at the close today, the SPY closed at $298.28. That's about $29.82 on the S&P 500 itself. We know it made a new all-time closing high on January 26 at $302.01. We then, of course, remember that the SPY fell down to about 281 or about 2,801 on the S&P 500 itself, then zigzagged and traded in a range throughout August, just above, call it 281, and the top, the lid on this, or the ceiling, was the green line, the 50-day moving average. So it got trapped in this zone right here, or trading in this range for the month of August. Then on good news about tariffs, burst out, broke out of that range, jumped above the 50-day moving average, and moved back up right to all-time closing highs again, back to 302, but couldn't stay there. Has been consolidating during the last week, and again, today finally fell at the close to close again, as I said, at 298.28. So we're right near these all-time highs, but can't quite seem to get there yet. Now, if the SPY needs to pull back here in the coming week, it has plenty of price support down at 295 and 294, right where the 20-day, the red line, and the 50-day moving average are coming together. We have no more price support down here at 288, where the lower channel line is coming up. More price support down here at 282, where the 200-day moving average comes in, 284. All along here, plenty of price support should the S&P 500 need it. Of course, we'd prefer always that it stays above the 200-day moving average. On the other hand, it could get more good news next week, and it could break out over 302. That would be the resistance line here, and head back into blue sky. That would be a very bullish thing, and but we'll have to stay tuned and keep an eye on it. And as we move into the fourth quarter, it will be important to see where it goes. Our next chart today is a chart we normally look at least a lot of the time, the Invesco QQQ ETF. As you know, the QQQ represents the NASDAQ 100, very important index in the stock market. Now, the top 5 holdings in the Qs are Apple, Microsoft, Amazon, Facebook, and Alphabet. Of course, these stocks represent about 43% of the Qs, so they're very important. Today at the close, the QQQ was trading at $190.80, just above the 50-day moving average, which is coming in here at 189. We'll call it and a half. And the 20-day is also coming in at 189, about and a half. So they're coming in together. Together, this could provide pretty decent price support for the Qs if they can stay above it. Now, we know that QQQ made an all-time closing high on July 26 at $195.29. So if the Qs in the coming week could come back up, move over that 195, and keep going, that would be very bullish. That too would be a move into blue sky territory. Otherwise, if that doesn't happen, we have that support at 189.50. And then, of course, more support down here at about 182. Price support here. We've got this channel line coming in at 188. And, of course, we have the 200-day moving average at coming in close to 179. Naturally, we'd prefer the Qs don't dip below that line. So keep an eye on all of that in the coming week while you're at it. And now we'll look at a chart we haven't looked at in a while. This is a daily chart of the Healthcare Select Sector Spider ETF. The symbol is XLV. It has 62 holdings in it. The top holdings are Johnson & Johnson, United Health, Merck, Pfizer, and Medtronic. Now we know that last December, look left over here please, last December the XLV made a low at $80.62. Everybody made lows back then. And then it moved up pretty rapidly, made a V-shaped recovery, moved up to highs in February at about 93.50, excuse me, a high in June at about 94.50. That was a good thing. And then started to fall in July, fell lower down through the 200-day moving average, of course below its 20 and 50 days, fell down to support here at 88. So after it did that, it bounced around for a while and then finally started up again. And I think probably a lot of this has to do, as pharmaceuticals are an industry group within the sector of healthcare. And we know there's been a lot going on with some of the pharmas and opioids. So there's a lot of bouncing around here again in the month of August and was for most of the market. Finally broke out here in the last little bit. And I did notice today, as I saw the XLV going higher, I checked into the big pharmas. Again, they are an industry group within the healthcare sector. And quite a few of them were starting to really move higher here, like Lilly, Johnson & Johnson, Merck, some of those. So healthcare may get a little extra boost here, and if the market gets a little cranky next week, it may, if it stays positive, be a place to hang out. So in the coming week, if the market remains positive, I may add shares of the XLV to my trading portfolio. Again, it closed today at 92. It is above the 50-day moving average currently, the 20-day and the 200-day moving average. Looks like it could have a little room to run here if it gets going and head back up maybe toward 95, 96, again, if the market remains positive and these healthcare companies remain positive. I'm going to place my initial stop at $90. That's just below the 200-day moving average that's coming in at 90.22. That will be my initial stop. If the XLV does move higher, continues to be positive, I will turn that stop into a trailing stop, possibly using a close below the 50-day moving average at that point. So whatever you want to do, just make sure you protect yourself. And you may want to watch the XLV in the coming week. And now on to the coming week's economic reports. But first, please join us this coming Monday for our next session of Tony's Market Club. If you're not sure how you can make money in the market right now, let us help. During our session, we talk about which side of the market to trade. I give you a mini trading lesson, and I also give you stocks and ETFs that may become ripe for high potential trades. If you can't attend the live session, no problem. The recording is available to all of our members just a few minutes after the session ends. And we send you a Thursday update each Thursday so you know what to do with your trades. This is a low-priced, high-value opportunity to learn more about the market and make more money. So please join us. For more information, go to the link on this screen or just click on the button below. And now for the upcoming week's economic reports. Not much on Monday. On Tuesday, we have the S&P Case-Shiller Home Price Index and Consumer Confidence. Wednesday, we have new home sales and our usual crude inventories. Thursday, we have the GDP, gross domestic product, usual jobless claims, pending home sales, and our usual nat gas inventories. On Friday, we have durable orders and the University of Michigan consumer sentiment. Again, join us for Tony's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. For more information, just click on the button below. Until next week, keep green on your screen. I'm Toni Turner, and this is the Market Now.